frightening right now. Yesterday I sent out a quarterly newsletter and a video sharing my views on 2015 and 2016. But let me spend just 2 minutes with you on what's happening now and what we're doing about it. This might get a little technical, but please hang in there. I think you're going to find it helpful. So there's a lot of fear in the market right now about China. As I said yesterday, their economic growth continues to slow down. It's not news, but they are slowing, and that's not a good direction. And because some of the changes the Chinese are also making to their stock market trading rules and currency exchange rates, their stock market has plunged, and it seems to be bringing everyone else along for the ride. I'm not saying that we should ignore these things or that these are unimportant, but there's always a crisis in the world, and it seems like it's more so now than ever. Now, some investors are worried about a bigger issue. Are we about to enter a recession? Is that what this market is all about? At this point, the S&P and NASDAQ have fallen 8% and 9% respectively from their highs in early December. That's not good, but those numbers are about consistent with the tame pullbacks we've had in 2013 through 2015. But this market is more erratic right now, and that's what's got a lot of people scared. And that's why it's important to have perspective. So I want to show you just two graphs that I hope can do that. The first one shows the S&P weekly price changes against its 200-day weekly moving average. You can see that it was smart to sell when the rough black line, and that black line represents the S&P, when it dipped below the blue line, which represents the 200-day average. And it made sense to own stocks when the S&P was above that average. This isn't a guarantee of the future, of course, and these aren't the only indicators that I rely on, but I just want to give you perspective, like I said. Now look at the second graph. It shows that the S&P daily average against the moving average on a daily basis. And you can see that this line, or this graph, shows the S&P violating its 200-day moving average much more frequently. And if you sold out every time the S&P did that, you'd be buying and selling all the time, missing out on the recovery. Again, I'm not saying that we don't have to worry about a recession or the weakness in the market. And I'm not saying that this simple graph is the only indicator I follow. I'm simply sharing with you that it's not time to panic. This could be a normal pullback that we've gone through many times before, or something more serious. And I'm tracking it. But I want to do the best I can do to make sure we aren't getting in and out of the market needlessly. Obviously, I can't guarantee the methods I use will protect us against losses or that we'll always do better than other investors. But what I can guarantee is that I know that this is not easy for many of you, and I'm watching the situation very closely, and that I have objective tools, and I'm ready to make changes when it seems appropriate to do so. As I said in my earlier video, it might make sense for you and I to meet to discuss your financial plan or asset allocation in order to make sure your portfolio matches both your long-term goals and also matches your need for sleep at night. If you'd like to discuss this further, please call and set up a time. I'm always happy to sit down with you and discuss. Thanks very much, and have a good day.